Finance Committee called to order. Roll call, Ms. Jenkins. Here.
Here. Here.
All right, thank you very much. First item, consider approval, 2019-2020 property and casualty crime, errors and omissions, insurance policies.
Mr. Toller, you have Finance Committee. Tonight, we're going to address all three of our different types of insurance policies. With us tonight is Ms. Carmel Moore, who is our insurance consultant. She's standing behind me. I'm going to turn the mic over to Ms. Carmel.
Thank you.
Thank you, Mr. Schnattelbach. Good evening.
Good evening.
In front of you, you should have some spreadsheets. Am I correct?
Yes, ma'am.
Okay. It's that time of year again. All of your insurance renewals are coming up for renewal on September the 7th. And so I'm here to present the renewals for you. The first spreadsheet that we're going to go through is going to be the liability one. It's going to start off with the general liability. And this is the same format that you see me present to you every year. I'm going to focus in on column 4 because that is the renewal offer being offered by your current agent currently. You'll notice that your agent is Emery & James, Berkeley Insurance Company, and the limits of liability on the general liability will remain the same at $3 million. The deductible, the SIR that they're quoting, is going to remain at $150,000. When you go halfway the page to item A16, you're going to notice the annual premium. And you are seeing that correctly. This year, the premium's going to $755,496. It's a $178,000 increase over expiring. And there's several reasons for that. Berkeley Insurance Company has had some changes internally. And I can't go into a lot of detail on what has happened at Berkeley. They are still a very good carrier, very solid carrier, but they had to adjust their rates. And this isn't just here in Tangipahoa Hope Parish, this is across the state. They were low, they've realized that, they had issues with claims, so now they're raising their rates to compete with everybody else. I have to commend your current agent, Emery & James. That's Ryan Gamble and Brian Gories. They're here tonight. They have done their due diligence. They have gone to the marketplace. They approached 17 carriers on your behalf to get quotes to make sure we're still getting the best possible thing out there. Of those 17, 11 have declined to quote because of the losses here at Tangipahoa Hope Parish. They received 3 viable quotes, and when I say 3 viable quotes, it was 3 carriers that actually issued quotes. Only one of them, Berkeley, is one that we can actually consider. The other 2 were Old Republic and Chubb. There were some issues with the coverages on those 2 quotes that I could not recommend. I don't show them here on the spreadsheet because it's not something that I can consider. They don't have all the coverages that the Berkeley package has. It would be a harm to you if you were to change to one of those carriers. Their premiums that they quoted were not in line with Berkeley. They're off, but that's because the coverages were off. And so I'm not even going to consider those. And then 2 other carriers of those 17 were not even competitive, and one just gave a real general indication, nothing solid, nothing that we could bind and request to quote tonight. So we're going to move forward. I'm going to move forward with just going through Berkeley and the options that Berkeley has given us tonight. You'll see right under that A16 annual premium, I'm looking at A19. There's a couple of options that they're offering. The first option is to increase the deductible on all 3 coverages, the general liability, the auto, and the E&O, to $250,000, and that would bring the premium down to $694,714. And then the second one would be to increase just the auto liability to 350. Your general liability would remain at 150,000. The E&O would remain at 200,000, like it, 250,000, like it currently is. The only change would be to the auto deductible, and that would go to 350,000. That premium would be $626,996. And that's actually what I am going to recommend that you go ahead and approve, this Finance Committee approve tonight, is to renew with Berkeley with that option, changing the SIR. And in a minute, I'm going to go through some claims history so that you can see why I'm going to recommend that. The auto section is Section B. That will remain at $3 million limit. And then the current deductible is at $200,000. I'm going to recommend increasing it to $350,000.
So that would make the premium $626.
$626. It's going to be almost a $50,000, $49,996 increase over expiring, right under $50,000.
But 120 less than if we don't do it.
That's correct.
So our liability on auto insurance, and we say in auto insurance, that's covering our buses.
That are on the road every day, yes.
That's tires rolling on the road, whatever the vehicle may be.
That's correct. That's all your maintenance vehicles, your school buses, that's everything. Part of that increase is coming from, and I'm glad you asked about the autos, part of that increase is coming from the number of vehicles we have on the policy. The current year, the 18-19 year that we're still in, we had 412 vehicles listed on the schedule. This coming year, we have 470 vehicles listed. We have 58 more buses listed on the schedule than we had last year. And I understand you've bought buses more throughout the school year, throughout this past year, and we're gonna add those on. So part of that increase has to do with increasing the exposure for the carrier.
Have you talked to administration about that increase in the number of buses?
Yes, I have.
Actually, we have, that's an issue that we need to deal with. A lot of those increases are spare buses that are not on the road at the same time as the regular buses. So we need to clean that list up before we
Well, but that would make a difference. That's a big difference.
will make a difference.
S-
Turn it over to the immigration and ask you the impact on that. But a lot of those vehicles that are included in that increase are spare buses that are not communicated by the administration to the insurance agents to let them know that spare buses are only used when the regular bus is not in the route. So it's not an additional vehicle to be insured, it's a replacement vehicle.
Okay.
Same thing with athletic buses and things like that.
No, activity buses are insured because they can be used at the same time as the regular route buses. Spare buses are, many of them are owned by our contract drivers who have spares, or it could be a spare buses that we own. The only time they're ever used is when the regular bus is not in operation. For whatever reason, maintenance, repair, whatever.
And we've had that arrangement in the past and it wasn't included in our number?
Yes.
Is that,
Yeah, that is absolutely correct.
okay. So
So do we need?
what do we do?
We'll get that corrected with the quote.
For the purposes of us voting tonight, what do we do?
It will not exceed the figure y'all approved today. It will get less than that.
Okay,
Correct.
so what we would be voting on is a not to exceed.
That's correct.
Okay.
And the same thing, just to clarify, with the limit, with the liability, we're talking about any accident, we would be liable for the first $350,000.
That's correct.
Yeah, but like I have a vehicle
And if we looked at the
that I pay a lot less.
history on that to see what that would, is that where you're going?
That's where I'm going, and I'll skip to that right now if you want. In your packet, you should have, and I'm not sure if it copied in yellow for you. Okay, it says, it's a regular size sheet, and on the top of it, it says liability, insurance, auto GL, public officials, E&O, renewal, claim values as of 6/30/19. Is everybody looking at that sheet?
before we do that, can I ask you, I know I'm just messing up your whole presentation.
No,
I'm
go ahead.
sorry. But on the same topic that we were on my packet, if I turn the page, there's a section that deals with leased car physical damage.
That's correct.
And same issue there. We've all of a sudden jumped from 30 to 40 to
From
now up
42
to 69.
69.
Mr. Duncan, a lot of that has to do with the new,
So we're-
buying new buses, we're lease purchasing the buses. The financing agent is requiring us to put insurance on those buses. So we are adding to that fleet. That is why the number has jumped for those vehicles. But what may be included in that, we need to clear up is, we're doing away with driver's ed. We may have the 4 driver ed vehicles in that number that need to be removed.
Okay. But if we're moving towards more lease purchased, that's replacing the other vehicles that we were,
That weren't being financed, that the board owned, that we were able to operate without having collision coverage on those vehicles.
okay.
Because these vehicles are new, because we are financing them, the financing agent is requiring some type of coverage on those vehicles.
Right, but I guess what I'm saying is, shouldn't the other number be going down if our leased coverage is going up?
No, the total comprehensive, the liability portions in the first covers all vehicles, whether.
They're leased or anything at all?
Yes.
Okay. All right, I'm gonna let her get back on where she wanted to go then.
Okay, no problem. And yes, I'm gonna just expound on that for just a second. Yeah, what you saw on the first page, the auto liability, that covers everything that rolls, everything that has tires and rolls. That's all the vehicles. The second page where you looked at the lease car physical damage, that's only the ones that you're leasing and they're requiring you to carry physical damage. And as you're replacing some of your older vehicles that might have just had liability, this number here is going to continue to grow because we're going to have to keep putting them on to cover for that physical damage in case there's an accident. And that's just so that you satisfy the lease agreement that you've signed with that vendor.
Okay.
Mr. Duncan, keep in mind, we're lowering the value of those vehicles as we pay on the lease. So we're only covering the outstanding portion of the debt related with those loans. And as the buses are paid off, they'll be coming off this section of the auto insurance.
It just seems like everything's going up.
Yes.
It is. And so while we're talking about the auto, the sheet that you don't have, the claim sheet that you... Okay, well then I'll just come back to it in just a second. Okay, let's finish the liability portion, which is the next section on page 2, section D, the school board errors and omissions liability. That, page 2, that will remain the same for this renewal with the 2 million limit, 3 million aggregate, 250,000 on your deductible, your SIR for that one, no changes there. And of course, that premium is included in that original premium from the first page, the $626,996 that I'm going to go ahead and that you recommend that you go ahead and approve tonight. And then when we flip the page to page 3, this is section F, the crime insurance. Column 4 again is what we're looking at. Emery and James, the agent. Travelers Insurance Company is the carrier. There are no changes to this policy at all. The $1 million limit with a $10,000 deductible, and then your total annual premium is $11,483. They kept their rates flat again this year, which is good. Then section G is your machinery breakdown, your ball and machinery policy. Again, with Emery and James, Travelers Insurance Company. And that policy will remain the same again for this year with a $250 million limit. And the premium for this renewal is going to be $10,484. It's a very small $600 increase over expiring. And I'll recommend that you go ahead and approve that tonight too. And then the next section, which is page 4, is going to be your building and contents policies. Column 4 is what we're looking at. The current agent is Powell and Associates. The current carrier, Colony, which you see in column 3, is on your they write the first layer, the first 10 million. This renewal, Colony has decided they don't want to write the entire 10 million. They have agreed to layer with Westchester Insurance Company, and they each are going to share in that 10 million 50-50. So they're each going to share, they're each going to have a 5 million limit for that first 10 million, and they're going to pay all claims in that first layer 50-50 between the two carriers. It's still just a 10 million layer. There's no change there, no change in your deductibles. You're still going to have a 1% deductible for wind and hail by named storm. You're still going to have an earthquake and all other perils at $100,000. No change there. The premium, you'll notice on H18, is going to be $499,038 for this renewal. That is an increase of $73,000. It's about a 13% increase in premium for your total building and contents package. That's really small in comparison to what I have seen across the state. I deal with 16 municipalities around the state. All but 3, as of today, including you, have not renewed yet. Those others that have renewed from January through July 1, I'm seeing anywhere from a 15 to 28% increase in property. The property market went crazy this year. There's less carriers writing, and those that are still writing, they only want smaller portions of the risk, and they want a much larger rate. I was happy with the 13%. Your agent did a really good job going to the marketplace and trying to keep it as low as possible for you. Then you'll see the second section, the second half of that page. This is your second layer of your policy, which is a $15 million layer. So you have a total of 25 million. Velocity is a program carrier, and there's several companies within that program that insure that 15 million. It's the same as expiring. There's no changes there as far as the carriers are concerned, and the premium is going to be at $126,844 for this renewal. So your total for your property for this year, and you'll see some options on there also. Underneath, you'll see a 3% increase in your named storm deductible to 3%, and you'll see what the difference in the premiums are there. In my opinion, it's not enough of a decrease to make that change, because 3% versus 1% is a huge number when you're looking at a $264 million statement of values. So I'm not going to recommend that you go ahead and make that change tonight. I'm going to go back for a second. I think they just handed out the claims, the summary for you.
Well, real quick before we leave,
Sure.
on the building and contents, under the terrorism, A19, 42,333.
Correct.
Is that additional coverage that we're getting for acts of terrorism?
That is, if you want to buy coverage for acts of terrorism, it's an additional $42,333. This board in the past has not purchased terrorism coverage. That's strictly up to you if you want to decide this year to
That's not in the
purchase it.
price.
It's not part of that premium that you see above.
Okay.
This would be in addition to.
Would that cover the event that we experienced this recently?
No, sir.
Would not.
That's not considered an act of terrorism.
So what?
If that's not terrorism, I don't know what is.
We'll talk about that in item C where we're recommending.
That comes under cyber, and we'll talk about that in a minute.
Okay.
But that would not be covered under terrorism.
Okay.
Okay, let's go back to the handout they just gave you. This is just a quick snapshot of claims. And I know it's a lot of information, a lot of numbers to look at. What I do is, I usually hand this out, I usually give this to you, prepare one of these every year for you. And it's just a quick snapshot of your large claims for the last 6 years. I don't use the current year when I do my averages because that year is still ongoing, it's green, it's not a completed year yet. So I use the previous 5 full years when I'm looking at my averages. And you'll see when you look at the second page, in the center part of the page, average claims for this school board for the last 5 years on your liability package has been $680,338. That's auto and GL and E&O, that's all 3. That number, that average is up over past years. And I can tell you your 2018 average, which you're not going to see that number on the sheet. I went back through my files and grabbed them out before I left. The 2018 average, you at 596,000. 2017, you at 576,000. 2016, you at 470,000. So you can see your claims have steadily been going up. The biggest portion of that increase is because of your auto liability. That's where the claims are coming in at. When you look all the way over to the right-hand side of the page where you see option 1, option 2, option 3, if you were to take one of the options that we talked about tonight, option 1 is your current policy with Berkeley and renewing it at the higher premium. Option 2 would be to change to a 250,000 SIR for all lines. And then option 3 is to keep your auto, the GL and the E&O the same and change your auto liability to 350,000. And that's the one that I'm recommending. If you were to have the same identical claims for the next 5 years that you've had the past 5 years, this is what your incurred amount would look like. And as you can see, the first year, the 2013-14 year, your incurred was 836,000, even jumping up to a 350,000 deductible. You're still going to look at 836,000. There's no change there. The same thing the next year. The same thing the next year. The same thing the next year. And the same thing the next year. And that's because you haven't had any claims go over your SIR. They go right up to it, but they haven't gone over it. So the amount that you're paying out would be the same whether you kept the 200,000 deductible or you increased it to 350,000. So what I'm saying is it makes sense to save that $128,000 and take on the 350,000 SIR on the auto.
So are you telling us that the premiums that we've been paying in all of these years did not actually result in the insurance company covering us because all of these claims were paid out of our own self-insured funds?
That is correct.
And they're raising our premiums even though they haven't actually paid anything for us?
That is correct.
We're in the wrong line of work.
Put that money in our own account, not pay them.
Any other questions? I think we're all just sticker shock.
Well, it's something you can just, and I think we had you do this for us last year, but it's, I think, important for the public to hear this again as far as just kind of explaining your role and what you do for us as a board when you bring these recommendations to us. You know, as I always understood it, you don't work for the insurance companies. Your job is to essentially grade the papers of the insurance companies that bring us proposals and make sure that we're getting the best possible deal that we can out in the marketplace.
That's absolutely correct. I have no ties to any insurance carrier, insurance company, agent, or broker. I'm strictly independent by myself. I have no connections at all with them. I'll work with your current agent, whoever your current agents are. I do work with them to solicit quotes for you. They send me all of the paperwork, all of the policy, all of the forms. I read through it to get the information for the spreadsheet, and that's what I bring back to you. I make sure that they have all of the most accurate information they could have to give you the best quote that they could possibly give you. Insurance carriers are all different. They all have their own little quirks. I read through all of the policy language, and I find which ones are good and which ones aren't, which ones that we don't want to deal with, in essence. And so that's my role here. I'm not a salesperson. I just review everything that's given to me, put it in a form for you, and explain it and answer your questions as best as I can with the knowledge and the information that I have available to me.
And your area of expertise is basically keeping up to date with what's available in the marketplace, what the trends are.
Absolutely. I have information. I get periodicals. I get monthly newsletters. I read all of the insurance journals. And so I see everything that's going on. I kind of have my finger on the pulse of the marketplace. And what's good is I don't do it just here. I have 16 other clients in the state, and they're not all in this area, so they spread out, all the way from North Louisiana to the bottom of Louisiana. And so they all have their different challenges. But yes, I have been doing this. This is my 35th year in the insurance industry.
And based upon all of that, your assessment of what's been presented is, although it's a huge increase as far as the value that we're getting, it's the best value that we can get in the current marketplace.
That's absolutely correct.
Okay. With the option of taking the higher,
$350,000 deductible on the auto.
so we're going to give them more cushion to make sure that they don't ever actually pay any of our claims for us.
Hopefully, yes.
Okay. All right.
Okay. So do I hear that in form of motion that we accept approval?
Yeah, move to adopt the administration's recommendation from our consultant with the options that she recommended.
Motion's made.
Jerry.
Second by Mr. Moore. Any other questions?
No, but there's going to be a second motion that you're going to need to do, and that is to reject the uninsured motorist coverage on the auto. It has to be a separate motion,
Okay.
and authorizing the superintendent to sign that rejection form.
Okay.
And we don't have to do that on the rejection of the terrorism policy?
No, sir, just on the uninsured motorist.
So,
All right, on the first motion then, to adopt the recommendations from the administration, any opposition? Hearing none, that motion carries.
move to specifically reject the am I saying it right? The uninsured
Uninsured
motorist
motorist.
coverage, and authorize the superintendent to sign the documents necessary to execute that rejection.
Okay, we have a motion. Do I hear a second? Second. Second by Mr. Moore. Any questions on that? Any opposition? Hearing none, motion carries. Thank you for that.
Thank you.
Okay, item B, consider approval of workman's compensation insurance policies.
And I know we just voted on this, but can I just make sure that I'm clear that this vote, Mr. Schnattelbach, is an up to amount, and we're going to fix this issue with the,
Number of vehicles
number of vehicles. Okay. All right. What are we doing
Item B.
now? Okay.
Item B, workman's compensation. Mr. Snobbart. Or, okay. All right.
Okay, in front of you should see a spreadsheet for your excess workers' comp. This one's not as bad as the first one, actually, it's really good. The workers' comp, you will see 4 columns on that sheet also. I'm looking at column 4, that's the one I'm gonna focus in on. Your current agent, Emery and James, Star Insurance Company, and they are offering renewal the same as expiring, with the deductible being at $500,000 per claim. The premium for this renewal is going to be $76,099. No change in premium at all. And I'm going to go ahead and recommend that you renew this policy also.
Let's do it really, really fast before Emery and James changes their mind.
Do I hear that in the form of a motion?
So moved.
Motion made, seconded by
Jerry.
Mr. Moore. Any questions? Any opposition? Hearing none, motion carries.
Thank you. And I think they were going to make a copy of the claim sheet. I do the same thing that you saw in the other claims. I do one for workers' comp too. So you'll get that later on and you can review it. That's it.
All right, thank you very much. Item C, consider approval 2019-2020 cyber insurance.
It's got 2091.
Mr. Chairman, Board, in the past,
I'm dyslexic, so I read it right.
in the past, we have rejected cyber insurance, but tonight, we're recommending to move forward. So Ms. Bro's here to explain a little bit about the coverage on cyber insurance. I'll turn it over to her.
Okay, the last spreadsheet that you have in front of you only has one column, 2019. This is a new coverage being quoted and recommended this year. Your agent, Emery and James, Westchester Insurance Company. And they are offering to write a cyber liability policy. And Westchester, there's not very many carriers out there writing cyber. There's only a handful of them that are writing it. It's relatively a new type of coverage out there. But Emery and James did go to the marketplace and they did bring back 2 quotes. Westchester was one, and that's what you see here. The other one was with another carrier called Brit, and I did not show it on the spreadsheet because their premium was substantially higher for the same coverage that is right here. And so I just showed the one on here, but they did go to the marketplace, they did do their due diligence for you and got quotes. Those were the only 2 carriers willing to quote on your account this year because of the current cyber incident that's still ongoing. Once that's finished and cleared up, future renewals, we may have other carriers that are willing to look at and quote, but for this renewal, we just had these 2 to look at. But the cyber liability is going to give you first-party coverage. It is on a claims-made form. They give full prior acts, except that they will not cover the current cyber incident that's ongoing. There is an exclusion for that in their policy. They will not cover it at all. They are doing a $2 million limit, a $25,000 deductible or retention. Defense cost, unlike your liability policy, it's paid within these limits, not in addition to. And some of the coverage that's provided under the first party is business interruption, extra expense, digital data recovery, and network extortion. It also has a third-party section, liability section. Again, it'll have a $2 million limit with a $25,000 deductible. And some of the coverages provided in that section are going to be for your cyber and network security, your privacy, electronic, social, and printed media. And then it also has a section for cyber crime, and this is much smaller limits. It's only a $100,000 limit, and it'll cover your computer fraud, funds transfer fraud, and social engineering fraud with a $25,000 deductible. I'm not as concerned with the cybercrime agreement having those lower limits, because those three coverages you see listed there, you also have that listed on your crime policy. So there is coverage under your crime policy for those three specific incidents that are listed there. The premium for this renewal or this policy would be $13,872, and I'm going to recommend this board this year go ahead and purchase this policy.
So in the future, with an event like we just had, we would pay the $25,000 deductible. They would help us with rebuilding as far as cost associated with rebuilding our network.
Up to $2 million limit.
Will that cover much
$2 million?
that we just went through? It will cover? Okay.
This will not cover the,
I know that, but I mean, knowing what we went through,
What are your costs right now?
it's hard to say, but it's hard to say right now.
so,
It should cover it.
But
It
it
should.
should cover it.
All right, do I hear that in the form of a motion?
And if you don't know, we're in trouble, because you know it all, right?
All right, we have a motion. Motion on the floor. Need a second?
One more question. So
Let me get a second first, though, Mr. Moore.
Okay, all right.
Second?
Second.
All right, go ahead.
Right, so this is actually a $2,000, it covers up to $2,000.
2 million.
2 million.
2 million.
$1,000,000. So it
Big
actually
difference.
covers up to $2 million of cost for recovery.
Correct.
All right, any other questions? Any opposition? Hearing none, motion to adopt.
Oh, I don't know.
Thank you, Ms. Bro.
You're welcome.
That was a lot. Maybe next year we'll see some great reductions. All right, item D, consider Sumner High School scoreboard. I asked that to be put on the agenda. The scoreboard at Sumner, y'all probably heard about it before. It's been ongoing for several years. It was replaced a year ago, and it's a great example of corporate sponsorship and public sponsorship with, and I'm a pat First Guarantee Bank on the back again because they came up with a $10,000 donation to help fund the scoreboard. What we're asking for tonight is I'm asking for a motion on finance to pay off the remaining $12,000 of that so that we're not saddling that on the backs of the athletic program, the booster clubs, or the kids, since we do have such a big corporate sponsor in the scoreboard being installed. So I'd like to hear that in form of a motion.
So moved.
Motion made.
Second.
Second. Any questions? Any opposition? Motion carries. Thank you.
I'd like to waive the rules to add something.
Absolutely. We need unanimous vote to add something to our agenda.
This is the,
We'd like to add, consider approval of the low quote from Pond Food Corporation to provide natural disaster food pickup service in the event of a natural disaster resulting in the loss of electrical power to our school sites.
so I think it's two separate motions. First is a motion to waive
Add
the
it.
rules so that so that an item can be added to the agenda.
So I'll take that in form of a motion to
Motion.
waive the rules. Second,
Second.
we have a motion and a second to waive the rules to add this to the agenda. Any question? Any opposition? Motion carries. So motion's on the floor.
Move to add that agenda item.
The administration's recommendation, okay?
The item we'd like to add is consider approval of the low quote from Pond Food Corporation to provide natural disaster food pickup service in the event of a natural disaster resulting in a loss of electrical service to our schools. This is a contract, there is no cost related on this contract, but if an event should occur, then we would incur a cost. They would pick up our frozen food, they would store it the first 2 days in their vehicles, their trucks on site, and after 2 days or whenever they would, power's restored. If it goes beyond 2 days, they would move it to their freezers and hold it there for us, and then when we have power back, they would return the frozen commodities and put it back in our freezers.
And just to clarify that this is no cost to us if we don't use it.
That's correct.
There's no retainer fee, there's no,
Yes.
So Mr. Toller, first we need a
Okay.
vote to actually add it to the agenda. Let's get that on, right? And then we can vote on the recommendation.
Thought we did that with the
We
waiver
did that.
rules.
First vote added it to the agenda.
Well, okay.
We
Well, that's
did
what the first one was that we can waive the rules,
Okay.
Okay.
but
right,
that's
well
why I
then-
was asking earlier.
All right, I'll entertain a motion that we add that to the agenda, made by Mr.
The motion,
Duncan,
yeah.
seconded again by Mr. Moore. Any opposition? All right, item is on the agenda. So on the agenda item, do I hear a motion that we accept recommendation from the administration?
Yeah. Move to adopt the administration's recommendation.
Motion made, second again by Mr. Moore. Any questions? Mr. Meeks?
So if we're just doing a contract with them, I mean, we've done this for several years.
Yes.
So in the event you have formal paperwork that if this happens, how much it's going to cost us to do this?
Yes, yes. The contract reads that it would be $590 per truck per day to pick up the food. And then they'll store it in their trucks at $375 per day per truck. And then if we have to go to warehouse storage, it would be $190 per truck that we move to their warehouse storage. And then when they come to return the delivery of the food back to the schools, it'd be $585 per truck. Now keep in mind, the truck would serve more than one school. We could probably put, a truck could serve 3 or 4 schools, full freezers in one truck. These are huge trucks. So it wouldn't be that cost per school, it'd be that cost per truck.
It's about, I mean, is that the same price we already had in our quotes from
You know,
before?
Ms. Kendra, I didn't have a chance to ask that. Is it?
It is.
Thank you.
All right, thank you. That's it.
Any other questions? Any opposition? Hearing none, motion carries.
Thank you, Mr. Chairman.
Thank you. Any other items? Mr. Meeks?
I just wanted to ask, with the increase of this amount of money for this insurance coverage, is this going to wreak a whole lot of havoc on our budgets that we just approved?
It's not gonna help the budget,
Obviously.
that right now, because, we're going through the cycle expense too, so there is going to be some significant budget revisions.
Okay.
When we get a better idea on the cost related to that, I'll come back to you with, impact on both the insurance and the sidewalk.
Okay, and I did catch in one of her statements earlier that she would like to see us vote on this tonight, but it's not on the original agenda. Do we need to vote on this tonight?
The policy renewal is September 7th,
Okay.
so when we come to the first meeting in September, we'll be able to approve it.
I just want to make sure, because I caught she said that. Okay.
And then we'll have the better numbers as far as the automobile and stuff.
Exact vehicle numbers by then.
Okay. Anything else to be brought before finance? Hearing none, meeting is adjourned.